Welcome to TradeTheNBI.com. This is John. This report is for the 27th, and hope everyone had a lovely holiday. Christmas Eve for me was a little difficult. I ate something that just did not agree with me, and for the last couple of days I've been pretty much unable to do anything with massive stomach issues, but feeling much better. I think it's finally passed, so that's a relief, and can get ready for the new year to start. You can see we really haven't moved anywhere. No one expected us to do much of anything. We're pretty much flatlined here after giving a little bit of soft signals, but we've had a complete reset. Short-term buyers, this was just an opportunity to ease a little bit of the overbought. Now we're still at some lofty levels here, but you've got fairly decent DOC readings here, except for the fact that now we're seeing rising cyan for the first time. It's been pretty much in a decline below zero, but now you've moved back up, and you're very close to what would begin the first crossovers of cyan over, as well as a DOC spread, which would be the cyan shorts moving above your long-term buyers, and that could create a little bit more of a drawdown, and that would not be unexpected right at year-end profit taking and then the repositioning for the beginning of the year. So that's something to look at. I don't see it as being too dramatic. We've got a pretty decent trend run overall, and nothing's really violated it. It's been exceptionally clean without, even with, and the volatility's all been to the right side of what our expectations are. The NQ has filled back in a little bit more than the S&P, but likewise, it had a little bit weaker read, see, because the cyan had crossed the red back over here before when it started to do a little bit of breakdown. It's just a couple of levels below the yellow ABM, not too bad, and it's pretty much rebounded off all of them, even though it's been very light holiday trade. The numbers for retail and that are all pretty spectacular, so when those finally settle out, it's all going to be good news. Crazy activity was with the euro there for a little while. Had a couple of days where they did some flash crash things just for the heck of it. Didn't really show up on the charts very well because it's just a low liquidity thing, but still way elevated for readings here. Ridiculously high, but hey, US will take it because it just improves sales to Europe, so no objection there. And a strange bond rally too. Still we're seeing the expectation for rates to rise, not fall, and also for inflation to begin to start. Hasn't occurred yet, and the key components of that one are going to be obviously wages for labor, and then the second factor, which would be oil, which is the one we always look at next, and look at that breakout. And this is an indication. I read some really interesting articles. They were talking about the equilibrium and balance in oil supply right now, and I think there's anything but. I think as soon as there's a recognition of the growth of this U.S. economy, which is going to spur a worldwide economy, there's going to be a huge drawdown and increase in the need for supply, and whether that need can be met efficiently is really going to impact price. And so you could see now, if price begins to move up significantly, that is going to have a huge inflationary impact, and it's going to be broad based. And again, we talked about this for a decade of the no growth to super low growth policy that had huge influx of cheap labor and cheap oil as a way to mitigate interest rate increases. The cost of that, though, was huge unemployment and large welfare recipients. Here you may have the reverse action of that, where now we have pro-growth policies, which everyone can clearly see. That was given, a year ago from the election and the inauguration. It was plain and simple what the desired outcome was going to be, at least from regulation and improvement now with the new tax bill. But with that, you're going to need inflation to inflate out of the interest rate pressures. And like I've said, the question really becomes if the Fed is smart enough to be slow about interest rate rise, allow inflation to do its thing, to undercut some of that debt, because otherwise if they raise rates too fast compared to the relative growth, the deficit is going to skyrocket. rocket out of control. And this is why the gold trade is continuing to move. In fact, instead of the orange continuing up higher to suggest that, our mini rally from back here was going to fade, it has not. In fact, it has reset, which is an indication that even though you're starting to get closer to an overbought situation, it still has the potential to keep going a little bit further. I thought this might go a little ways and then trade back, but, of course we were waiting for a signal that shorts had, taken over control of it, which hadn't happened. We hadn't gotten the steel below cyan, and sure enough, it's continuing. So it was spot on with the bottom call. We got to that point where it was just super oversold. Doesn't mean it's not going to have that retrace to it. It just got to a point where it was extreme severe on this DOC, and we recognized that from the orange dip below, and then when it turned back, that number 2 popped in right back there. It hasn't been that enormous a movement from about 119 all the way here to 122 almost. So, been a decent run. Speaking of gold, we might as well take a look at the counter trade. I said that gold would rise in the inverse relationship to our cryptocurrency. So here we had that big short read that we talked about on Bitcoin, and you can see that it took a huge move, and then we ended up with a pretty strong reset. As I expand the chart, we go back over here. So it had the reset buy set up there, moved above that 50%, and then it's pretty much stayed there. Even though in these short signals, they've all been with steel resets. Till you get to right here, it was a little bit less, so you got a little bit more of a dip, and so you can see that kind of relationship, which is always nice to see. That in detail, and I think that's important to look at because you can see where you had the deep moves, you had almost zero impact in it, even though you were quite a ways divergent from the Fibonacci, those lines. That's a huge range. And then in this particular case, you had a little bit more of a pullback to the 50% with the reset, and then all it's done is pretty much held back there. Then you ended up with some more short signals. See the higher steel there, and sure enough, secondary move, it was a little bit better there, but still caused a little bit of a breakdown right to the 50% range. And then once that took place, there was no new signal for a buy, and so right to the zero, though the range has been narrowed. Still showing some decent power. It's going to be a problem for central governments around the world, that it's only going to get bigger. Nobody knows how to control it or what to do with it. You can see the 5K action here for the ES or S&P futures. It's just been pretty much zigzag, solid nothing. We've just been going flat for the last few days, and that's just about holiday, zero, nothing happening, and there's no new news to move anything in any particular direction, so I think that it's going to move. But now we're getting close to the year end, and so people have to close out their books, and so this is going to be about capturing liquidity draws in that, or seeing who needs to perk up the year-end balance with the last couple of days left and start to rotate their portfolios. So that's the long and the short of it, but overall not bad, and wishing everybody a happy new year to begin, even before we get there. So it could be a very strong one for economic gains and everything. So it's should be a lot more volatile too. I think that's going to be exciting leading into the new year. As always though, trade well. We'll talk again later.